Hello, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Today is today is October 21st, 2019. It's a Monday, and you know what? There's a big thing out there. I'll tell you, I didn't see this one coming. I've known it's happening. I knew it was happening, but until you actually see it happen for yourself. Let's get the charts open right here and take a look at what's going on. China is bracing to unveil 5% GDP growth. Now, if you guys don't follow the numbers on China, China had phenomenal GDP growth, and Chinese, too, at the same time, when they report their GDP growth, generally they fudge the numbers by a few points, So that's kind of accepted that it's, but still, it gives you an idea what China's doing. Now that 5%, they've been running like 7%, 10%, 12%. They've been tapering back, and the latest was 6.2%. A sudden 5% GDP growth is an enormous drop in the Chinese economy. That's what it represents. An enormous drop in the Chinese economy. That's basically what it means when they say 5% GDP growth. It says, earlier this month, Beijing marked the 70th anniversary of the People's Republic of China with a huge military parade showing off quickly decelerating. That's the point I want to make. The Chinese economy is quickly decelerating. Fresh evidence last week shows GDP could slip under 6%. Chinese GDP published last Friday shows 6% growth for third quarter, is the weakest quarterly print since 1992, down from 6.2%. And now they're bracing to unveil 5% GDP growth at two key meetings in coming weeks. That would indicate that the Chinese economy right now is doing exactly what I've said all along. The Chinese economy is taking a nosedive. I knew this was happening. I've been following this for a while now, and I knew the Chinese economy was rolling over a lot bigger than other people out there can possibly imagine. But when they realize this, see, right now, I've realized this for a while. I know what's going on. I've been saying it on my channel about how the Chinese growth is going off a cliff, how the Chinese economy is falling like it's in free fall, and nobody's really been listening. But when these numbers come out, this is going to be proof right in your face, that the Chinese economy is falling off a cliff. And when that information starts to impact the other markets, it's going to put up alarm bells in the whole world when this unveiling comes of 5% GDP growth. That's why this is important. That's why I'm doing this show this morning, because this is the realization to the rest of the world, not just to me. I realized this months ago. I've been talking about it on my channel, right? But when the rest of the world realizes it, how's that going to impact the markets? It's going to impact them very negatively. But let's move on. Let's look at the gold price today. Gold price today is up $1. It's riding in a very narrow trading range right now. $1,490 for gold. Silver today. Silver is up 25 cents, which is a rather large move. Now, I'm going to tell you guys, we see silver making the biggest moves first, ahead of gold. That's the real rally, and so we know. I'm pretty sure that we're in the real rally for gold and silver. Now, a lot of these gold and silver guys out there that associate with mainstream traders, they're thinking, hey, you know what? You've missed the boat in gold and silver. They're thinking that we're at the top of the rally and that we're going to see prices decline in the future. And prices go back down to, $14.25 for gold or lower, or even into the 1300s for gold, and they're thinking silver's going to drop back down to like $13 and stuff like that. And they think that this rally's toward the end. They think this is the end of a bull market in gold and silver, and we're going to go back to these really cheap prices. That's what they think. These guys, because they're associating too much with these other traders. They're like a guy that's looking at a picture, a painting in a big museum and stuff, and he's got his nose right up against the painting. He can't really even see what it is. You got to stand back a ways, you see, to see what's really going on in all this. You know, they just don't have the entire picture. Let's take a look right now at cryptocurrency market capitalizations. And cryptocurrency's doing real good right now, you know. We're looking at 223.9 billion. Bitcoin dominance is 66.4%. Let me refresh the page. Yeah, and we've seen a little uptick in price in the past 24 hours on the coins, but it's not significant. So we're seeing a little bit of strength starting to come back just a little bit into the cryptos. We have to see if this continues. We're not completely out of the woods just yet, you know. Going to keep our eye on cryptos. Let's take a look at the Dow today. The Dow's up 40 points. Now, you know, the Dow needs a few things to happen for it to maintain this rally, or for it to actually make new highs. It needs a few things to happen. It would like to see a little bit higher crude prices on crude oil. It would like to see more support by the Fed and greater support, and it'd like to see it come faster. In other words, it would like to see more quantitative easing. It would like to see the interest rates drop quicker, you know, and get back down to zero or below zero. It wants this support from the Fed, and it's feeding on this support. The market right now is it could roll over big, because even with the support that the Fed's already given it and everything else, it's still not going up a lot or significantly. It's a stale market. If we take a look at it, we can just see, let's take a look over the last month. It's went nowhere. It's just basically went sideways. 3 months? Let me see if they'll give me 3 months. Yeah, look, nothing. In fact, it was higher at the start of 3 months than it is now. 6 months? Nowhere. A year? Basically nowhere. 2 years? Nowhere for the last 2 years. If we look at the high back here on way back in 2018, the first month of 2018, till now, we've went nowhere. We've just been basically treading water with a crash right here in the middle. Not really a crash, but quite a steep correction right here in the middle. And what do we got happening in the market? We got these big major banks, you know, and the plunge protection team all supporting the market, and we've got all of this investment coming in from stock buybacks and everything else. And where's the market going? Nowhere. The market is basically exhausted at this point, and it's only relying upon support by the Fed and what they're going to do with cheap, easy money, monetary policies and stuff. It's holding the market at these levels. You pull away any of that support, the market's going to tumble. One of the things that's supporting the market is oil. Oil price has to stay up. Let's take a look here at oil. What's happening today? We're getting an 89-cent drop in the price of oil. We're down 1.64%. That's a fairly significant drop in oil. The market does not like that. Does not like that at all. Let's take a look at U.S. Treasuries today. And what we're seeing is a mixed bag. You know, when I see this happen in the Treasury market, and I've been seeing this for a while now, going back a ways, you see one day the Treasuries march up in price, and you see the next day the Treasuries fall in price. This is a clear indicator of manipulation in this market. This market is totally controlled. Totally controlled market, the Treasury market, now at this point. The whole world's central banks here, it doesn't matter what country you go in, they're all scooping up and buying up treasuries, and they're dropping yields. And I mean, markets need to operate in a free manner in order to have price discovery. That's how markets supposed to work. There is no proper price discovery anymore in any of the markets because of this contrived world we live in. This is all going to end rather abruptly when it does end, and it's going to end soon because the markets are so off of what they should be. Let's take a look at U.S. dollar index. 97.26 on the U.S. dollar index. And this has dropped quite significantly, to tell you the truth, in the last week or two. You know, we were riding up around 99, and now we're 97.26. That's about a 2-penny drop, you know, in the dollar. Looks like it's trying to rebound, though, a little bit in the last hour. It's come back. It was down around, let's see, 97.16, and now it's 97.26. Okay, guys. Thank you for listening to my show. Give me a thumbs up. And I'm going to tell you, we're on the verge of something momentous. There's a number of factors that can push this economy off the cliff, you know. And the economy is teetering on the cliff. It's ready to go. Those numbers come in from China. That's not going to be good, you know. And I'm watching the Brexit very carefully to see what happens. We are in the make or break moment for the Brexit. My tendency is to think we're closer to a hard Brexit than we ever were before. Catch you guys in the next show. Bye-bye.